Despite the Fed's hawkish comments, most investors are still betting on a rate cut as soon as March, and this expectation is causing them to hold back from investing in the US dollar, even though there is no compelling reason to shift their funds to European assets as well. As a result, the markets are experiencing a sort of stagnation with usually low volatility typical of the pre-Christmas season. Let's explore which news from the last two trading sessions this week might still influence the currency market. You're tuned in to the InstaForex TV. This Thursday, the spotlight will be on the final estimate of the US economic growth rate for the third quarter. The initial estimate was 4.9%, with a revised second estimate of 5.2%. If the final figure aligns with the previous one, it will signal that the US economy is steering clear of a recession, and this scenario suggests that the US might achieve a soft landing as the Fed tackles high inflation, potentially bolstering the US dollar. Friday promises to be eventful for investors, starting with Japan's inflation data. A slowdown to 2.6% is anticipated, which could bode well for the Japanese yen. The Bank of Japan aims to sustain an annual growth rate of 2%, a key factor in its monetary policy decisions. If the prediction holds true, it might increase the likelihood of an imminent rate hike. As the European markets open, all eyes will be on the UK, eagerly anticipating the release of November's retail sales data. Black Friday is expected to boost consumption, with sales predicted to increase by 0.5%, and this uptick could prompt a short-term interest in purchasing the British pound over the US dollar. In the United States, consumer spending is a major economic driver, accounting for over 70% of the total GDP on December 22. The U.S. consumer expenditure will be released. Interestingly, despite many analysts suggesting that the market is already winding down for the Christmas holidays, and the report could still influence investor behavior, potentially leading to increased buying of the US currency, the outlook is positive. Attention is also focused on the US durable goods orders report, with the analysts optimistic about the positive outcome for November. Last month witnessed a significant drop, the second largest plunge since April 2020, but given the Labor Department's assurances about the steady expansion of the US economy, we can anticipate improvements in the key macroeconomic figures. If investors remain confident in this data, it's likely the US dollar will close the week on a strong note. And we will monitor the market reaction to the above-mentioned reports. Subscribe to the channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.